Welcome to our corporate accounting class. This is the problem taken from Oral Gupta Radhaswamy. This is problem number 1 in page number 8.64. In this problem, it's a slightly typical problem. We are having all the important adjustments in this question. And here we are given with the balance sheet of H Limited and S Limited. S Limited, H Limited acquired 1/6/2002, that is S Limited is acquired by H Limited on 1/6/2002. This date is important for identifying and apportioning the things between pre-acquisition period and post-acquisition period. And total shares of subsidiary company is 500. Of that 500 shares at the rate of 100 rupees. Of that 300 shares are held by 300 shares are contributed by the holding. So majority shares are holding are contributed by the holding company, which is 300 shares. Okay, so the ratio between the H Limited and the S Limited, which is 3:2. Just have a look on that prob solution. The first part, 500 shares, of that 300 shares are by subsidiary, right? 300 shares in subsidiary by holding company. So 300:200, that comes to 3:2. Now let us go to that calculation of a capital profit. For that capital profit, what is that meaning? Profit available in subsidiary company before acquired by the holding. Revenue in the sense profit after acquisition of the company. So as per that concept, it is given that P&L on 1/1/2002. This is prior to the acquisition by the holding. Straight away we have to take that 25,000. And another one is a profit for the year is 36,000. This we have to consider. How to take this? Total year 36,000. For the full year 36,000. One part is before acquired by the holding. Another part is after the acquisition. So what the profit held in subsidiary before acquisition of the company. So 36,000 into 7. How to take that 7? This is, we are given with the point. Very clearly it is mentioned that company acquired by the holding on 1/6/2002. Right? So up to that period, this one we have to take. Okay. So 36,000 into 7 by 12. 21,000 is plus 25. That is capital profit. And that amount of capital profit is apportioned between H Limited and S Limited on the ratio of, already we ascertained the ratio 3:2. Okay, this is one. Number 2, second important calculation of a revenue profit. What is that revenue profit? What the profit earned by the subsidiary company after it is acquired by the holding. So as per that, what is the total profit given? 36,000. Of that we apportioned pre-acquisition period is 21,000. That is before acquired by the holding. 21,000. Balance is what? 15. This is revenue period. That is post-acquisition period. 1. Number 2. General reserve is given. We are taking the entire amount of general reserve for the revenue period. See, in here you should know one important point. Though we are using the term called profit, but it contains both the profit and general reserve. So, okay. So, 15,000 plus 20,000. Total 35,000 is the revenue profit. That 35,000 is apportioned between H and S on the ratio of 3:2. Then third calculation, which is calculation of minority interest. What is that minority interest? Shares, major part contributed by the holding and meager part contributed by others. Okay, that comes to 200 shares. That 200 into 100 rupees is the face value, so 20,000, and plus share of S Limited capital profit, share of revenue profit for S Limited, 18,400 and 14,000 we have to take. with the 20,000, that comes to 52,400. Okay, so that is the minority interest, and mind it, this amount of minority interest that will be in new balance sheet, that is consolidated balance sheet, liability side. Okay, then another one is a calculation of goodwill. How to take that calculation of goodwill or cost of control? That amount, that is amount of investment for acquiring that subsidiary company, that comes to 75,000. This is given in the balance sheet in the column investments of H Limited. H Limited is investing 75,000 for the purchase of subsidiary, that is 75,000 minus face value of the shares. How many shares they are contributing? 300. So 300 into 100, 30,000. Then the share of capital profit of this part, that is a H Limited, 27,600. Total comes to 75,000 minus 30,000 minus 27,600. Final balance is 17,400. Okay, this is called a goodwill. If it is the negative figure, then we should take it as the capital reserve, whereas in this question it is only 17,400, so it is taken as goodwill. Now the last part we have to take, that is preparation of consolidated balance sheet. Mind it, as per the rule, we should prepare the balance sheet in a company only based on the provisions of schedule 3, whereas I have prepared just for a easy understanding in the last minute. So just I prepared in the old format. This is also acceptable, but not truly it is correct. Okay, so the consolidated balance sheet is prepared. Land and building for first H Limited is 1,65,000 I have taken. Plant and machinery account is 2 lakhs, it is considered. Stock for first company is 40,000 and S Limited is 90,000. Total 1,30,000 is taken here. Then please put a point on mark on debtors. The debtors of H Limited is 15,015 and H Limited is 50,000. Total debtors that comes to 65,000. Please mark this point. In adjustment, there is adjustment that what is given in the adjustment? Included in the debtors of S Limited is rupees 10,000 owing by H Limited. You please mark this. This is called mutual owing. Okay, some adjustments, some transactions made between the H and the S. Both the companies are belonging to the same group. Okay, so we have to adjust that mutual owing. This is taken as mutual owing. That 10,000 should be deducted. Why? This company send materials to that company. Okay, so here the value is not the sales or the purchases should not be accounted as per the rule. So since this is belonging to the same company, we should take it as the mutual owing. So in both sides, debtor and creditor should be deducted by 10,000. Okay, 65 minus 10,000, 55,000 is the final figure. Bank, as per the question, we are taking that bank 15,000 plus 16,000. So 31,000 we have taken. Then bills receivable 15,000 for second company S Limited. We are having the adjustment. Bills receivable rupees 10,000 held by S Limited or accepted by H Limited. See, please have a look on that. In asset side, bills receivable by the subsidiary company is 15,000. And in liability side, that amount of a bills receivable is given as 20,000. Okay, bills payable. Okay, so this company having the bills receivable by the same group, within the group by another one group company. Okay, so that this is also the mutual owing. This is also considered as, treated as mutual owing. So in both assets and liability side, we have to deduct the amount as by 10,000 rupees. Okay, then now coming to the liability side, the share capital is given as 3 lakh rupees of holding company. Only that item we have to take. and a subsidiary company share capital should not be considered. Why? Because their shares are contributed by outsider as well as the holding company. That one is adjusted and treated in minority and goodwill. Okay, clear. So face value of the share for 300, and for goodwill, face value of the shares for 200 in minority, and for goodwill for 300 shares we have considered. So 300 plus 200. Total shares in subsidiary is 500. That one is considered in these calculations. Okay. Then general reserve is given for H limited 20,000 we are taking. S limited should not be taken. Why? If want, you please make a note of it. S limited general reserve should not be considered. Why? Because it is considered, it is taken and adjusted in revenue profit calculation. Then profit on 1/1/2002 for H limited is taken, and profit for 2002 for only for H limited is taken, and for S limited already those items are considered and adjusted in the calculation of capital profit and revenue profit, right? Then next one is creditors. For both the companies, the total creditors that comes to 60 plus 40, 1 lakh rupees. Then bills payable of 20,000 is given. Just now I explained. Bills payable of 20,000, adjustment is given as bills transacted between the company is 10,000, right? So 20 minus 10,000 we have to take. Then next part is the items already we calculated. What? First, number 1, minority interest, working note number 3. You please have a look on that calculations. 52,400, that is minority interest. And 4, working note number 4, goodwill, it is 17,400. You total the balance sheet, accordingly you enter and total the balance sheet. Your balance sheet is supposed to be tallied. Okay. Now you are conversant with how to apportion the profits, how to calculate the ratio between the holding and the subsidiary, how to take the capital profit and revenue profit, and calculation of minority interest, then calculation of goodwill or the cost of control. And another important adjustment which is that is mutual owings in case of debtors and creditors, in case of bills receivable and bills payable, right? And next one point is profit on unrealized stock. Of course, that is not treated in this problem, but in yesterday's session I have shown how to treat the profit on unrealized profit as per the provisions of section AIS 21. Okay, so all the major aspects of this chapter are covered in this.